more about that later. And then you've got unemployment levels I've talked about. Last month it was 3.7. So the month before it was 3.7. We've gone, and everybody thought, okay, here we go. We've gone from 3.5 to 3.7. Now we're going to go, next will be 3.8 and then 3.9 and then 4. Guess what? The new figure just came out and it's back to 3.5 again. So there are a lot of Australian companies still employing people. I know some people have said to me recently, but people are laying off staff. Look at all the technology companies in the US. Yes, people are laying off staff, but it is not significant, okay? The significant number is, where is the unemployment rate? Okay, that is more important. So there's more jobs out there than people. That's why we need to keep getting more people into this country. Migration, you all know the numbers are going to be bigger than what people are saying, and that's always a good story if you're looking at your growth in property prices. GDP, not a big jump in GDP increase, but annually we are at 2.7, which is not a bad place to be. RBA ideally would want us to be somewhere around the 3 plus or minus 0.3, 0.4. Okay. So last year, what happened? Again, I'm not going to go through all of this. I'll let you just quickly read it. These are things that happened in 2022. We came out of COVID. Lockdown ended. 2022 started. And we thought, hooray, everything's going to look up now. But nobody predicted inflation to surge the way it did. Nobody predicted the war. Okay. Nobody predicted the fastest increase in interest rates. And you can keep going through that list. So we don't know what's going to hold for the rest of 2023. We don't know if China is going to go and invade Taiwan, for example, or something else will start up in the world like another global financial crisis. But based on what we know, we will make some predictions and give you some insights shortly. Okay, but that's the backdrop in terms of what happened in 22 when things were starting to look up once we came out of the lockdown. The biggest story at the moment, and everybody's focused on it and everybody's talking about it, is the cash rate. The most important factor with cash rate that I'm going to share with you today, and some of you may not know this, is that if I go back to 1990, if I go and look at the last 30 plus years, okay? If I look at the last 30 plus years, the average cash rate is 5%. Okay, it's 5%. Are we at 5% now? No. There have been in the last 32 years, there have been 1 increase here, 2 increase, a long prolonged increase here, not a lot, not a big by numbers, and then a increase here. And the latest one is here, okay? The latest one is here. Now, where does the RBA and the government want the cash rate to be? They want it to be here. Okay, at 2.5. 2.5 is the optimum place where the RBA wants the cash rate to be. So somewhere between 2 and 3, they're happy. They're happy. Okay, they don't have to do anything. If inflation is also between 2 and 3, extremely happy, because the cash rate inflation ideally should be at the same place. But what's happened? We've ticked over. Okay, it's a little bit higher than that now. Okay, it's ticked over. Are we too far away from where the RBA wants it to be? No. 3, if it gets to 3, RBA is happy. Okay, so we want inflation to come down. So we want RBA to stop increasing rates. But compared to where the average is for the last 30 plus years, it's at 5. I first came here and paid 17.5% interest rate for my first property. Okay. So why is everybody cribbing about interest rates at the moment? I say to people, we're in a low interest rate environment. Still, I say to them, we're still in a low interest rate environment. So big deal, we're paying 5.5% now. Okay. The big deal is why people are cribbing is because of this. Interest rates fell. You see here, interest rates fell all the way down to 0.1. It never happened in our history. It was a short-term phenomenon, okay? It only happened for a short term because we had to pull all the levers during COVID to make sure we revive the economy. And that's the only reason why it went so low. Now, the other big thing is it jumped very, very quickly from there to here, and a little bit more actually now, in a short space of time. And that's never happened in history, not that quickly, okay? So that's happened. And to make it worse, inflation is high. So when inflation is high, the cost of goods that you are buying is high, and at the same time, interest rates are actually going up. So everybody is concerned about that and how that will impact the economy and the property market. But the message, one of your key messages tonight, if you have a takeaway, is please understand that the cash rate for the last 33 years average is 5. We're not going to be anywhere near 5. It won't happen, okay? It's going to start correcting from here. And that's the next point I'm going to make, right? So consumer price, the inflation everybody talks about, it's peaked here. Now it's on its way down. How quickly it's going to come down will remain to be seen. In the US, okay, in the US, so if I can go back up here, in the US, the inflation was 9.1%. It peaked there in June 22. By December 22, it came down to 6.5. Here it has peaked at 7.8. So I'll let you make up your mind in next 6 months where you think inflation is going to come down to. Okay, I'll let you all sort of bookmark that and keep in your mind, because my prediction is going to come somewhere around that 6% by June. Okay, that is my prediction. Now, the problem with inflation in this country is you don't get the figures for 3 months. So what is going to happen at June? You're going to get the figure in September. And that is an important point, because both GDP and inflation numbers in this country comes out 3 months. Every other country in the world, in the Western world, it comes out every month. So the RBA governor has finally acknowledged that there is a lag effect, that we've done a lot of tightening. We should actually pause and see what impact all of this is having. So because of that short-term banking crisis, okay, and listen, Credit Suisse is okay. They're going to be bailed out. They've already got UBS buying them, and the Swiss government is actually helping them. So that bank is too big to fail, what they call too big to fail. That's a topic for another day, but there are certain banks which are systemically important financial institutions, SIFI banks they're called. Those banks, you cannot allow them to fail. HSBC, where I worked for 19 years, is one of those banks. Okay, they're SIFI, they're important banks. But putting that aside, because of that issue with Silicon Valley Bank and the ripple effect that has had in the US particularly, and the negative vibes it has created through the Northern Hemisphere countries, and listen, Australia is not immune to this. But because our regulation is so good, we are not going to have a Silicon Valley Bank type situation happen here, or a Credit Suisse type situation happen here. I don't have time to explain that today because it's a topic for another day. But just again, it comes down to APRA and its policies. And APRA's policies does not allow liquid securities to be things like junk bonds, okay, mortgage-backed securities. Like the Silicon Valley Bank had a lot of mortgage-backed securities and a lot of long-term bonds in their books, which on a market value basis actually collapsed them. So there's a 30% chance of because of these events, there's only a 30% chance in my personal view of another 25 basis points in April, which would take it to 3.85. If this crisis did not happen, I would say this would be 90% chance, okay? But it's gone down to 30. First time the RBA governor is saying we may need to take a pause soon. The fact that he said that, and it's been minuted in the last meeting, and the fact that we have had this crisis post the RBA meeting means that there is only a 30% chance of another jump. Okay, this is my personal prediction. But you probably heard it in the media recently as well, that there's a 50-50 chance perhaps. Now, the pace and size of the interest rate increase will depend on all of these things. Listen, guys, if you want interest rates to really stop increasing, you need to stop spending money, okay? You need to stop spending money. Retail sales figures have to come down like it did in December, and it's jumped again in January. You need to tighten your belt, stop spending money, stop going out, doing this, wait until things get better. So you need to, the RBA wants to see inflation slowing down, retail sales coming down, and therefore GDP coming down, okay? Without having a recession, they want to see slower growth. And then they want to see how all of these other things are going to play out. All of these factors are important for the RBA when they make a decision. They balance all of these things. But in my personal view, this mini banking crisis is actually a fairly significant factor now that causes this 30%, okay? Now, this is the second most important thing I'm going to show you about interest rates. And this is what we call the interbank cash rate futures implied yield curve. What is this? If you haven't seen this graph before, what is this? So this one was on 9th of March. Why 9th of March? Because last time I did a webinar, it was 9th of March. On the right side, you've got today's graph, okay? Now, if you blank out the right side for a second and focus on the left side, on 9th of March, I told all my listeners that this is where fixed rates are actually set. When we set fixed rates are set by the money market. So in HSBC, I set the fixed rates. I get these graphs drawn using the implied futures, implied swaps curve, and also the bond market. And you draw up what's called a yield curve, right? Now I told my listeners on 9th of March that, listen, that banking crisis didn't happen then. That the money market determines fixed rates, RBA only determines cash rates. RBA has nothing to do with fixed rates. Now the money market thinks that this is where this dotted line is where the cash rate is, right? They reckon that there's going to be a increase and then a slight decrease. That was on 9th of March. And what I told my listeners on 9th of March is that in the second half of this year, these graphs are going to come below the cash rate, like around here. So we are July here. This is July. Around here, by middle of the year, you will start seeing this graph come down. Guess what? In 2 weeks, on the right side, it already has done that. It's already done that. Okay. Why did this happen? Why did this phenomenon happen? Because of this mini banking crisis. What I also told my listeners is that the fixed rates in the second half of the year, are going to come below variable rates. So variable rates, let's say variable rates are at 5.6. In the second half of the year, I'm predicting the variable rates to go down to somewhere around that 4 to 4.5%. So all those people who are coming off that fixed rate at 2.5%, and they've got a fix in the second half of this year, they're not going to be looking at the fixed rates that we were talking about on 9th of March, which is probably well above 6%. They're going to be doing it at a much lower rate. Is the media telling you about that? No. But when a pause happens, like it's going to happen soon, okay, either April or May will be a pause. If the pause happens and the figures with retail sales and the figures with GDP and the figures for inflation all track what the RBA wants to see, then I'm telling you, the second half of the year, you will see, as soon as the money market says that the next move in interest rate is down, not up, as soon as the money market thinks that, guess what? Fixed rates are going to come down. Going to come down a lot, okay? A lot. So watch this space. This has happened in 2 weeks because of one factor. If put another 3-4 factors together, if it's all going the same way, money market are going to say, we're going to see a 3% very, very quickly again. So Please keep that in the back of your mind. People here at 9th of March were telling me, well, you know, every time I go to a party or a function, everybody's telling me, mate, rates are going up another 1%, 2% maybe. They do not know, and I feel for them. They do not know the real facts of how quickly fixed rates move, okay? Fixed rates will move faster, much faster than the cash rates. Now, those 4 increases that you saw before, I just want to show you what happened with those 4 increases we've had in interest rates in that period. So this was the first one. August to December, cash rate went up 2.75%. And then so on and so forth. Okay, 1, 2, 3, 4. I did ask you to bookmark those 4 increases. And at the moment, we're at 3.5% increase. Okay. Now, if I look on over here, what happened to housing market? What happened to the housing market 1 year after the last? So December 94, 1 year from then, December 95. What happened to property prices? It jumped. Not jumped, but went up slightly, 0.3%. Here it jumped 14%. Okay. So, and so on and so forth. Here it was negative after the first year, negative after the first year. This is after 2 years what happened to property prices. This is after 5 years what happened to property market. So my point with this table is very simple. Do interest rate increases crash the property market? What's the history telling you here? There is I can't see any crash on this table. Okay, there is no crash. Does the property market correct? Of course it will correct. Okay, there is affordability issues when interest rates go up. There will be a short-term impact. If I say to all of you now that in the next 12 months, property prices are actually going to increase, then some of you might say, well, what's this guy talking about, right? What I'm talking about is interest rates still are very, very low. Still very low, okay? And it is about to go lower in the next 12 months. So please, here I haven't filled it out because I would be curious to see what will actually happen after 1 year, 2 years, 3 years. Okay, so coming back to Sydney and what's happening in the property market here, I did say to you, I'm going to talk a little bit about infrastructure and what the government is doing, because that is one of the factors that is keeping our unemployment so low and keeping business investment high is this graph here, okay? These are not my numbers, these are New South Wales Treasury numbers, okay? This is Dominic Paratet's numbers, and they haven't changed for a number of years. What our city is going through is what we call a once in a 50-year transformational change. There will be 6 million people living in our city, just in our city in 2036. There'll be 8 million people living here in 2054. To cater for this type of growth, we need almost 40,000 dwellings per year. 40,000 dwellings per year, okay? Now, against that, just rewind back a little bit. 2020 and 2021, COVID, lockdowns, no migration, no students. Okay, so we've got a backlog to catch on, and we have got more people coming like a normal year plus backlog. So instead of 90,000 people coming into our city requiring 40,000 homes, we are now suddenly going to have 200,000 people perhaps coming into our city. The numbers are going to be a lot bigger than the government is predicting. That's why Chalmers keeps revising his numbers, okay? So you got huge demand coming. Is it going to come just for 6 months? No. 12 months, 24 months, 36 months. This demand is going to keep coming. We are a favored destination in the world. Supply? What's going to happen to supply? Supply is already low, and I'll talk more about that in a minute. But what you're all experiencing, look at the right side here. There's $50 billion of just transport projects in the next 10 years. Just transport projects. And we're talking roads, tunnels, metro, airport. All of these things is requiring significant investment in our economy. These figures are massive compared to even all the other cities and states in Australia. And that's going to keep unemployment low. That means if you invest in property in the city, you cannot go wrong. Okay, that's the point. So keep that on the back of your mind as we go through the other slides. Now, I call this current state of our property market a perfect storm for apartments. A lot of you know that apartments did not go up much. So just to show you the point, here's the 2021 graph. House prices in every city just about, okay, except Hobart was a bit of an outlier. House prices on the left, apartment prices on the right. House prices jumped significantly, apartment prices were subdued. What that's caused is what I call a huge gap between house and apartment prices. Now it's a perfect storm for apartments for a number of reasons. The reason why apartment prices did not go up when house prices were going up significantly, there are some very good reasons. One, there was no migration. Migrants come and stay in apartments, okay? The people who were buying house and land packages, and I've been selling them to them, all lived in apartments. They've either lived in Parramatta or Westmead or Homebush. They were all coming out of apartments because affordability increased. They said, I can afford a 900,000 house and land package in Schofields. Why should I go and buy an apartment? So apartments were not in vogue, and because migrants were not coming and students were not coming, so apartments were empty. And the vacancy rate on apartments actually went up. In some suburbs, went up to 4, 5, even 6%. Well, guess what? All those factors that cause apartment prices to be subdued in the last 3 years have turned the table. They're the opposite now. Huge migration. Expatriates coming back, students coming in big numbers, right? Rentals going up. So all these factors are now suddenly positive for the apartment market. That's why I call it the perfect storm, okay? Now, supply is the other remember demand and supply? Supply is the other. So demand is going to go through the roof. I don't think any of you disagree with me. But what about supply? During COVID, okay, in 2021, there were only 8,800 apartment commencements in Sydney. Commencements. It takes 2 to 3 years to develop something. Down 70% from the peak in 2016. Construction starts were delayed because of COVID and supply chain issues. So much fewer properties on the market for sale, okay? Number 4, rentals are heading up and up. There's a chronic shortage of properties. I've been screaming in all of my webinars, telling people that, listen, there's going to be a chronic shortage of properties. Demand's going to increase. Supply is going to go down. Please, if you are renting a property, go and lock in for 3 years. Lock your rent in for 3 years. Those that listen are happy. But we have this issue which is not going away, okay? You can't overnight create homes. So the issue won't go away. It's going to get worse. Don't be surprised if another 12 months, the rentals go up another 20 to 25%. In fact, there's a 90% chance of that happening. Affordability issues with houses and lifestyle change and downsizes, people are looking more at apartments. I have never seen so many downsizes. People looking for a large apartment, large 2 bedrooms, big balcony, okay? Terraces. I've had so many downsizes approach me. Can you find me this? I'm selling my house. It's a lifestyle change as well. People want to live in apartments. This is the new generation. They want to be close to transport, close to cafes, close to shops, etc. And affordability, houses are more expensive now. So significant stamp duty saving for first home buyers. Now, if you're not sure what this means, the New South Wales government, if you're a first home buyer, you can choose either to pay your stamp duty or to opt for land tax. Now, the land component is what you pay land tax on. So if you buy a house and land in Rouse Hill, for example, your land value would probably be, let's say, argument's sake, 800,000, and your construction cost will be 600. So you go 1.4 million. Okay, it's probably a little bit higher than that. But your land component is slightly bigger than your house component. When you buy an apartment, and I own a lot of apartments, and I can tell you that the I've got an apartment in a very prestige building in top right. It overlooks the whole of the city. It's on level 13. Okay. Now, I recently got, because I've got to look at my calculations for my land tax. I recently looked at the land value. The land value, so it's a $1.4 million apartment. The land value of it, anybody want to take a guess? It's not even 100,000. It's like 96,000. Okay. So if you take the land component of an apartment and you choose the land tax, the number is so small, you won't even feel it. Okay, that's an important point. It's that policy actually favors you buying as a first home buyer apartments and choosing land tax as an option. There's a tip for you. And we are in a low unemployment and huge, as I've already said, infrastructure spend. These are my 7 reasons. Okay, these are my 7 reasons why I think there's a perfect storm for apartments. You all saw land values go from 500,000. If anybody, in Ponds area, Rouse Hill area, Box Hill area, Marsden Park area, land values actually did not go up 25%. It's almost doubled. 500 became 900. Now, of course, there is some correction. Now it's gone. 500 has now become probably 780. Okay, so there's been some correction. But apartments, if I say to you, well, listen, an apartment. If any of you listening to me owns an apartment, I would say to you, don't sell, okay? You wait. You wait. The perfect storm for apartments is now. Or you buy an apartment now, lock it in, and watch it off the plan, and you watch it grow into between now and settlement time. So you've seen that graph. Now, this is the gap I'm talking about. This is a 30-year graph, okay? 30 years. One thing in the graph you'll see, this is the combined cities, capitals. House on red, apartments, the blue one. They almost run in tandem. You can see they almost run in tandem. Some people said to me, but sir, apartment prices don't go up, do they? And I said to them, how long have you been in Sydney? And they said 3 years. I said, you're absolutely right. 3 years, it hasn't gone up. But normally you don't see this gap. See this gap here? This gap has formed in recent times. What will happen now is this gap will close. So do not be surprised if a $700,000 apartment in the next 12 months becomes $800,000, okay? And in the next 5 years becomes $1 million. Do not be surprised. I've been in this city long enough to tell you that a jump is coming for all the reasons I have described. This is the third most important thing I'm going to tell you today. And so it was the cash rate, the fixed rate, and this is the third most important thing I'm going to tell you today. Remember I said apartment starts were very low in 20 and 21. This is apartment completions in Sydney. Completions in 2022, 14,000. Not much. Remember what we need? We need 40,000 dwellings a year. 2023, 9,600 completions. 2024, 4,500. These are not my numbers, okay? These are not my numbers. These are research people who do the numbers all the time. So look at the supply graph. It's going down significantly. Remember Economics 101, supply and demand. Where's demand going? Demand's going that way. Supply is coming that way. You don't have to be a rocket scientist to work that out. Why I'm saying 20% jump in apartment prices, because this is the facts. These are the facts. Okay. What's rentals doing? Going through the roof. All the investors are going to start, as soon as interest rates start coming down, and let's say it comes down to fixed rates start coming down to 4%, even sub 4%, start seeing 3.8, 3.9. Rents are not going to come down. Demand for rents is going to continue to increase in the next 3 years. So rents going up, investors jump on at 3.8, 3.9, lock in their interest rates. And what's that going to do? Prices are going to go up. Okay. Prices are going to go up. So the New South Wales government suddenly woke up and said, hey, we got a rental crisis. If they asked me, I would have told them that 2 years ago. I've been telling all my listeners, we're going to see the biggest rental crisis in your lifetime. But they woke up. We've got to release more land. December 2022, big announcement, 70,000 new homes. So we're gonna rezone all these areas in the northwest and southwest, accelerate it so that we can build houses. How long will this take? First, rezoning. 2, they're gonna do DAs. You know how long DAs take in council? 1 year. 3, then construction. It's gonna take 4 years to get this supply. 4 years for 70,000 homes. Is 70,000 homes enough? Absolutely not. Absolutely not. You saw the numbers. Okay, you need 40,000 a year now. We don't have 40,000 a year. So we are heading for a rental crisis, and we are heading for a supply crisis with homes generally, homes and apartments generally. That in itself is going to push up prices. If you bundle that with interest rates going down again, my God, when interest rates went down before, we did not have any migration. We did not have 200,000 people coming here every year. So please keep those factors in your mind, okay? Now, rents, a little bit about rents quickly. Now, you can see in the last 12 months, okay, annual change, and houses top panel, apartments bottom panel, okay? So top panel, you can see Sydney here is the blue one, 19.2% jump in rentals in the last 12 months, okay? In houses, apartments, 24.2%. Most rental properties are apartments, they're not houses. And houses don't give you a high rental return. So right now, apartments are giving you a high rental return. So with rentals going up and interest rate potentially coming down, you're going to see that return actually increase. So that's a backdrop. So what happened, I was telling you before that the COVID time, the rental vacancy in Sydney was 3.9%. I've taken the graph out because we've got too many graphs. We were at 3.9% at the peak across all types of properties in all of Sydney. Now Sydney is at 0.9%, okay? Look at Brisbane, 0.6%. I can tell you that Gold Coast at the moment is at 0.1%. 0.1%. There are no properties there to rent. Perth is a crisis. People are sleeping in cars. Adelaide is a crisis. We are not going to stay at 0.9. In the second half of the year, you're going to see us same as Brisbane. You're going to see us at 0.6. That is critical crisis, okay? Major crisis in rentals. That's going to push rentals up. You're already seeing in some suburbs in Sydney, there's queues, 30 people, 40 people attending, 100 people attending even in a property in Randwick you saw in the news. So this is a rental crisis. This is a vacancy rate that we probably keeps going down. This vacancy rate will keep going down, and you'll see a major crisis happening. So in summary, this is the simplest graph you'll see today. Sydney's story for the next 5, 10, 15, 20 years is simple. We're going to continue to see economic growth. Why? You saw New South Wales, infrastructure spend, unemployment low, everything that the government is doing is going well. Jobs growth will continue. As people spend money, more people coming here, business will want to invest more money. Wages growth is going to happen. You need wages growth to cater for inflation issues and to be able to buy properties. Population growth is going to continue to happen. You saw New South Wales Treasury numbers. These 4 things happen, this will happen, and then that will happen. This is very simple. Like it's as simple as you're going to get. So in this city, it's a perfect place to invest, and all of these factors are going to play out in the next 5 years, 10 years, 15 years, 20. I'm telling you now, in 2030, which is not far now, 7 years, you are not going to be able to buy any dwelling in Sydney under $1 million. Okay, this is just history. And with everything that we know that is coming up, this will hold true. Okay, so you need to buy properties to get ahead. Now, when you buy a property, it is very, very, very important that you get these 4 things right. If you don't get these 4 things right, then you're going to complain about, I bought a property in 2020 and it's 2023 and my property value hasn't gone up. Lots of examples of that. People bought a 2-bedroom apartment in Rhodes. I use that as an example a lot. And they paid $1 million. They bought off the plan. Today, they're saying it's still worth $1 million. Hasn't gone up. And then people who bought land in Rouse Hill for $550, they're saying, well, my land is now worth $850. So what's the difference? The difference is you've got to be very mindful of what you buy. Firstly, the location and what you buy. Okay, look at these 3 factors. Then you got to pay the right price for a property. You should never pay a premium for a property. You got to always buy a property at a discount. How do you do that? I will tell you in a minute. Okay, timing is important, right? I'm telling you, timing is a perfect storm for buying an apartment, but not for any apartment. We have over 30 projects in Sydney right now across all the suburbs, apartment projects. I can sell you a Meriton in Parramatta. I can sell you a Rhodes project, Bilbergia project in Central Rhodes. I can sell you a lot of different things. Am I going to sell you that? No. Why am I not going to sell you those? Because I know you're not going to get the biggest bang for your buck when you buy that. So out of 30 projects that we have, we only pick 2 of the best projects, which I would buy myself. If I'm not going to buy myself based on my research, I am not going to ask any of you listening to me to buy. Why? Because that's the values we live and die by. Okay, that's very important. So timing is important, and who is developing and who is the builder is important. These days, more and more important, okay? A lot of failures out there. So what's happening to the northwest of Sydney? And we have a project in the northwest, so I'm showing you the northwest. GDP for New South Wales, just New South Wales is bigger than Malaysia, Singapore, and Hong Kong as countries. The Greater Western Sydney, which includes the northwest, is the 3rd largest economy in Australia. Okay, just the west of Sydney. That's how massive we are. The northwest precinct will soon be bigger than Canberra. You got this happening, you got this happening. I won't go through all of that. If you don't know about the Aerotropolis, please Google it. It is a massive thing happening in the next 10 years, and we need to be mindful of that. Aerotropolis, hard to get your tongue around, is going to be the size of Parramatta. Massive, next to the airport, massive. Okay. These areas are the biggest growth areas in our city, probably in all of Australia at the moment. This is a big growth area. So you can see the population jump happening there. The other thing people show a lot, and you see it in the news a lot, is the auction clearance rates. Now, anyone listening to me, tell me why auction clearance rates suddenly jumped from 62% to 65% to 70% to 74%, and we've actually in the last 1 week in the last month, we've actually had a 76% as well. Why has that happened? When everybody is saying property prices are going down, you know, it's doom and gloom out there. There are a lot of buyers there who have got affordability. Interest rates are still low. Please, if there's one message you're going to take away today, interest rates are still low. Okay. Now, I won't dwell on that, but I told the media, I wrote an article in the papers in July 2020, when everything in Australia was doom and gloom. Even the CEO of CBA Bank said prices are going to go down 25% in the next 12 months. I predicted the prices to go up by 20% in 2021. If you want to share, if anybody wants me to share that article after this, please reach out. I'll share that article with you. And I had 7 good reasons. I like the number 7. I had 7 good reasons why I thought property prices are going to increase. Okay. And it held true in 2021. I also predicted the interest rates back in mid 2021. I predicted rate. Do not believe the RBA governor. Rates will start increasing in July. It started a bit earlier than that. And listen, I've been dealing with the RBA in APRA for over 35 years. I can tell you that the governor of the Reserve Bank was totally out of place in making the prediction that he did. Okay, it doesn't happen. We came to 0.1 temporarily. It was, I call it the honeymoon period. You look back and it's everybody will understand this. That honeymoon period is going to be over as soon as the economy starts growing and unemployment comes down. That honeymoon period will be over. Without inflation, interest rates would have gone up to around 2% anyway. So for him to open his mouth and say what he did is totally out of place, okay? And that's why I did not want to believe anything. I told all my listeners, go and fix your rate as long as you can, because rates are going to start rising mid-2022. I told them in mid-2021. Those that did are thanking me. So the other thing is in September, October 21, I told you that I predicted this rental crisis happening. And I said that the vacancy rates will fall below 1% in second half of 22. Well, it's taken a little bit longer, but I tell you what, it's heading further down. A few quick predictions, okay? I won't dwell on this. I know there's a cricket match out there as well, but very quickly, I think we've got one interest rate increase, maybe and maybe not. Okay, March. This is an old one. So I predicted one in March and one in April. Now I'm 30% chance of the April one happening. Inflation, I said it'll fall. I am not going to be surprised if inflation now falls to 6% by June, and 4% by December, and 3% by mid next year. There is every likelihood that this will happen. And this is faster than the RBA thinks and faster than where the market thinks. So you can see how things change quickly. You saw the bank bill futures graph. Retail sales will fall each month in the next 6 to 9 months. I think people are feeling the pinch of this interest rate. People are going to start spending less. They are going to procrastinate buying a new car and a new TV. These things will, in my view, happen. Okay? But people will still pay their mortgage. Delinquencies are not going to happen. For prices to crash, you need delinquencies. Next one, you're going to see a slowdown in our GDP growth. Okay, we might see one negative quarter, we might avoid it. We might see one negative quarter. A negative quarter is not a bad thing. Okay, negative quarter might mean the RBA will drop the interest rate quicker than we think. And here, I'll let you quickly read that. I think unemployment is going to go up. More people are coming here. Unemployment has to go up. That will reduce the wage pressure. Okay. So you listen, is 4.5% healthy? 4.5% is still healthy. 3.5% is abnormal. 4.5% is still healthy. Okay. We were at 5.2 before COVID. So still a very strong job market. If you start hearing news that somebody has laid off 1,000 staff, somebody's laid off 2,000 staff, don't get alarmed by that. We hired a lot of people. Technology companies hired significant amounts of people because their profits went through the roof. All the online people's profits went through the roof during COVID. They kept hiring. Of course, they're going to lay off some people. Okay. Now, I'm only going to spend the next, because I'm going over time, and I apologize for that, but I really want to show you a project that I'm excited about that we picked up as an agent. Only 2 agents on this project. The project's called Babylon. It's at 41 Terry Road in Rouse Hill in the northwest of Sydney. Bina is the builder. The architect is Rothelloman, one of the top architects in Australia. And why we are excited about this project is it's been done by Danville Group. They've been around for 30 years. But this is their first residential apartment townhouse project in Sydney. Okay, I'll make that clear. So why should we invest in this? Bina are the builders. The builder is important. Okay, the developers are normally not builders. The developer picks a builder to do their building. So the builder, most important thing for you all listening is the builder has to be important. Yes, the developer needs to be solid in terms of its cash flow. So they have building Liverpool, they built this Western Sydney University, Atrium, there's some of their projects, okay? Now you will see that Babylon is being built like Babylon. So they need some landscape person. There's a lot of planting, there is a lot of trees, there's a lot of turf, okay? There's a lot of landscaping. So they've hired one of the top guys in Australia to do that. I'll tell you what I mean in a minute. Now, where's the location? If some of you know the northwest of Sydney, this is Windsor Road. This is where Rouse Hill Shopping Centre is. This is where the new hospital is going. Okay, this is the only hospital that is going to be built there to cater for the growth of population there. So this is a really big deal. The site is here. Once it's completed, the hospital will also be completed, and it'll be like a 10-minute walk to the hospital. The Rouse Hill the station is here. The Rouse Hill Shopping Center is here. They will extend the Rouse Hill Shopping Center into here as well. So it's becoming 1.5 times the size. A lot of infrastructure going in from here. Now, this is the station. The station comes here to Tallawong Station. Then Tallawong Station, it stops there at the moment. Tallawong Station will go another 4 or 5 stops to the new Bedgeries Creek Airport. So excellent location, close to hospital coming up, close to the bigger shopping center, close to the metro that is going to take you to the new airport. Okay. Now, so a bit about the location. I won't go through all the bullet points, but what I want to do here, what I want to tell you here is property prices go up where there is population growth. There is no bigger population growth in Australia anywhere than you will experience in the northwest of Sydney. Rouse Hill will become a hub like you would not believe. Okay, the amount of development that I know, and I was with Blacktown Council before I came to this to do this webinar. I was with the mayor of Blacktown Council and the CEO of the council talking about certain things before I came here. And I can tell you the amount of projects that is happening in the Northwest. You will want to just come and live in the Northwest. Okay, look, you can see the numbers here. Okay, they're all big numbers. So this whole area is getting transformed. Norwest Business Park is only a few metro stops, 3 or 4 metro stops from where we're talking. Takes literally 10 minutes in the metro. Norwest Business Park is going to become the biggest business park in Australia by far. Okay, heaps happening in this area. If you want property growth, you got to buy in the right location, and I said at the right price. Babylon, a few quick shots. Babylon will look like this. It'll look like Babylon. There's no swimming pool, water features, waterfalls, lots of parkland. Okay, this is what it'll look like. It's only a 5 to 6 story building. It's not a multi-rise. This is not a swimming pool, by the way. These are water features. Okay, now there are 3 different types of properties within the same structure. You've got this kind of property, which is double story, which has got a garden terrace, and you got terrace and living space, and then bedrooms upstairs. It's like a townhouse. You've got the normal kind of apartments, which is 1 level. Then you've got this, what's called the sky terrace and residences. You live at that level, and then you've got your own sky terrace on top. Okay. Now, this is a common sky terrace, so it won't be this big. So all this planting will be done for you by these landscaping people, right? But I'll show you one in a second. But the interiors are second to none. This is one of the most prestige developments in the northwest of Sydney. So you got wool carpets, not your commercial carpets that you normally see, wool. You touch it and it's soft, okay? You've got USB ports, and you've got high double height ceilings in some of them, the courtyard outside. These are marble finished. Pure marble, I'm not talking scissor stone, marble and marble splashbacks, 2.7 ceilings, ducted air conditioning, marble in your bathrooms as well with LED lighting. Okay, these are top end finishes. This is what a terrace looks like. I'm sorry, private courtyard garden looks like in your apartment. Okay, I'm sorry, the furniture is not included, but once the trees are grown and everything, you've got your private oasis right next, like part of your apartment. You don't get that in your normal apartment. What I'm saying is this project, why am I excited? It'll stand out from the crowd, number 1. Number 2, the prices are amazing, and we'll come to that. This is like your private rooftop garden. This is what it looks like. Some are 30 square meters, some are 40. We've even seen one that is 70 square meters. Okay, you go down the stairs to your apartment. A few floor plans here. Okay, now this floor plan here, I believe, is a very similar one, is actually selling at the moment for around 730 or 740,000. Now, what the developer is doing is giving you 5% rebate at the moment. 5% rebate. 5% rebate is massive because they're going to take that off. As soon as we've got 30 or 40 sales, that goes off. then you've already got a jump of 5% on your property price. Well, listen, without taking too much of your time here, because I want to leave some time for questions, all I want to show you is that there's a lot of different floor plans. This is another double-story, 2-bedroom courtyard. This is a 1-bedroom with a roof terrace. Okay, this is a 1-bedroom with a terrace down the bottom. So there's a lot of different styles. Okay, the key point here is you are paying wholesale prices which have a rebate. This rebate will go away soon. When you're buying in a complex, you've got to be the first buyers. If you're not the first buyers, if you're buying at the end of the project in stage 3, guess what? Prices have gone up. And then some people who bought in stage 1 are going to say, well, I paid 60, 70, 80,000 less than you. So that happens. That's why we're excited. The prices here, if you buy for 720, I can sell you a 720, just a normal 2-bedroom apartment. Nothing that looks like Babylon, just looks like another apartment block. But here you are actually getting value. You're going to buy into a complex that is going to stand out from the crowd. That's going to ask, you're going to ask more rentals here. Okay. So I'll let you go through that. We are on one of the, as I say, the strata is low because there is no gymnasium, no swimming pool, no tennis court, none of that. And returns is excellent, actually. Now, this gives you an idea of the strata. That's actually for our studio, but this strata numbers are low. Okay, 3 bedrooms, 2 bathrooms, and you've got, right? Okay, so sorry, 2 parking, I should say. So these are, and the rental estimates you can see here. Okay, these are rental estimates. So all I want to finish off here, but please, I urge you to have a look at this project, because not often do we get a project in a great location like this, which will stand out because of its quality and its development. And also you're buying at wholesale prices. So tick, tick, tick the boxes. My advice to all of you listening, please don't blindly follow the media. Hopefully I've given you some insights into the property market that you will start questioning some of what you listen in the media. Okay, talk to an expert. I'm here to help you. I don't charge money for you to help you in your property journey. I want everybody to succeed. I have done that in the past. I have got a property portfolio. I can show you how to build a property portfolio. If 2 of you are working, if husband and wife or partner are working, and you got a good job and a good salary, listen, there is no reason in this world why you can't retire with at least double-digit properties. When I say that, I mean it. 10, 12, 15. If you are young, if you're in your 40s, you can, okay? If you think it's not possible, please talk to me. Okay, I'm here to help you. No obligation. The reason why you need to invest in properties and build a portfolio is because you cannot retire on your super. If your house is paid off and you've got $1 million in super, $1 million in the bank, you can't live on that. The bank currently will give you, okay, 4%. $40,000. Can any of you live on $40,000 a year? Absolutely not. If you own properties worth 10 million and you have a 2021 year where prices went up like 30%, guess what? 30% on 10 million, you just made $3 million. You just made $3 million doing nothing. Okay? You don't have to be a rocket scientist, but I can tell you that Australians are the richest per capita population in the world. We've gone past Switzerland and Japan. We are the richest per capita population in the world because of one factor. We own properties, and our property values keep going up. I will leave it at that and take questions. So that's our team. You can contact us.